Good morning, it's Jonathan Barrett with the Week Ahead report. This is a report where we discuss the up-and-coming economic numbers and also some of the themes carry over from last week and see whether they're going to carry on to this week. As probably everyone's aware, a little bit of a negative close towards the Dow, in fact most markets, over in Europe and the States. Obviously concerns still around about what's happening in the Euro, obviously what's happening with Greece. And also, we're just coming to grips with the release of strategic petroleum reserves by members of the IEA. But basically, crude continued to trade down, gold continued to trade lower, US dollars touch firm a bit across the board, and soft's still a bit weak. But equity markets still weak. I think this is part of the reassessment or realignment of asset values that we talked about and have talked about for quite some time, where we feel that a lot of this rally seems to be a little bit hollow and purely on the back of the stimulus programs. As we know that there's a lot of debate over what's going to happen, obviously when the stimulus packages roll off. The general view that we have is that this is where Bernanke allows the economy to work on its own accord, and obviously whilst at the ready to provide some form of stimulus, and we actually feel that the stimulus it could be by way, in fact, of using these other methods, as a form of intervention. Obviously, releasing this SPR when there's no emergency seems to me like there's one effort there by the Fed to get members round to help rally the global economy. Anyway, let's wrap it on. Quite interesting, I think. All right, the Dow. Dow was down 115. S&P was down 15, the Nasdaq was down 33, the top 50 was down 14, which was up a little bit, which was good. The CAC was down 2, the DAX was down 28. Our local market was down 41, 4,456. Quite a very, very important support here. There's no doubt about it around this level, because if it does break, I think the chances are that we can see 42.50 on the cards. I don't like to say that out loud. But it's certainly there if it breaks. Okay, let's have a look at some of the other markets. I guess first of all, let's have a look at the currency markets, and probably let's look at the dollar index first. Dollar index we've mentioned and we've talked about for some time. It is a tool I think the Fed will try and engineer to get lower inputs lower. As you can see there, we're right at resistance. And we've tried a few times to try and get through the 76.50 area. Look, if it seems to have held quite nicely. It actually feels as if it's getting ready for it. A break through that area there, I think, is not too bad. So I would like to think that it breaks through there, then onwards and upwards she travels. Righty-ho, so that's the dollar index. Have a look at the Aussie then, and you can see that the Aussies are right on those lows. This is a very important level for it on a daily basis as well. Because if it does break through here, we're in for quite a large move to the downside. And I think at the moment, look, very tough call, but a breakthrough here sends it lower. So just be careful of that. Dollar yen, we have been short the Aussie, so people are aware. We actually took profits home with us on Friday night, when perhaps we should have been actually adding to positions. Okay, there's the dollar yen, just still on its lows, still got a small position there. Just biding its time and expect it to move pretty soon. As mentioned, I feel that a weaker currency, weaker yen, probably better for the economy rather than a stronger one at the moment. Just purely there, obviously at the moment there's more imports, so having it stronger is better. But at the end of the day, they've got to get those inputs and turn them around. But anyway, stable currency there for the dollar yen. We do have some reasonably good data this week on that, so let's see how that unfolds. Okay, that's the currencies. Just a quick look at the euro daily. As you know, that euro hasn't been that healthy. There it is there. It's, look, I guess if anything there, it feels as if it wants to trade lower, but it's still within a big range. Okay, let's have a look at some of the commodities. Gold, we've been short gold. We took it back at 15.22. I was quite happy with that trade. Not too bad at all. 15.03, big fall here. Likelihood is that we might get some more liquidations. It is really on these highs and broken through a few trends, so perhaps being a little bit short here is perhaps not the right way to go. This is an aggressive move. Just have a look at that hourly chart as well. You can see that we're continuing that slide, when I came in this morning. I didn't expect it to be down here, but anyway, that's a quite aggressive move. As with silver, same thing, right on major support. We did favour silver over gold. We still do, but I think silver's got less to fall than gold. Okay, have a look at the crude markets, 92.90. I just checked to see whether that market is correct. Because coming in this morning, I sort of pegged it around about 91. We've taken on a small long position in crude because we think it is a little bit overdone, just so people are aware. We're out if it takes out 89.90, but we think 90 is the first step forward for some time. As with copper, very stable market there, a little bit of a lift there. We have been bearish copper for some time, but as you can see, copper has actually just stayed pretty neat in a range for some time. This whole formation looks bullish, by the way, just so people are aware, and it seems to be holding up nicely. Okay, let's have a look at the market on the local market. Then we might look at some of the softs. The SPY 4450, and that doesn't look too flash hot at all. But as you can see, we're right at this support area here, and a break of that does send it low, I'm afraid. So let's just be careful. But if it gets down to that 4200, it's a must-have. So let's see what happens. Okay, that's the SPY. Probably worthwhile also having a quick look at while we've got it before we go into the numbers. Having a look at the Dow. The Dow 11,876, as you can see. I think my expectations there for the Dow remain a little bit bearish, particularly whilst we go through this row of trying to work out what's happening. There you can see it there. Takes out this 11,777. Then she hits down to this trend line. That's a strong trend. So I can expect more weaker prices in the States over the coming days. Okay, that's pretty much about it on that front. Let's have a look at the economic calendar. And this week we haven't got a lot of Tier 1 news. It's normally second tier, but let's run through it anyway. Personal income out of the States, pretty important. And basically that's it. Retail sale in Japan, expect that to be lower as well. As we head into Tuesday, a comment by the RBA at a conference, that's the belly, and CPI in Germany, total business investment in the UK, and the Case-Shiller stuff will be obviously quite important, and consumer confidence. That will be the key. We would like to see a bit of an uptick in both those. Let's see. Looking at Wednesday, DEWR skilled vacancies in Australia, Eurozone confidence, which will be widely watched, CPI in Canada, but in the States, pending home sales, which is probably the most important one. A little bit of news out there in Japan as well. Thursday, job vacancies in Australia, vehicle production in Japan. Expect that to be relatively negative, obviously, when housing starts not that crash hot. And I guess, if anything, there in the States, initial jobless claims, consumer purchases managers out of Chicago. That's probably about it. And then as we lead into Friday, new home sales, which are important, but University of Michigan confidence, construction spending, and the ISM manufacturing. Also domestic vehicle sales, all expected to be a little bit perkier. I guess when you look at the data, we're all expecting to see something a little bit more out of the States, but I think the level of pessimism over what's going to happen with stimulus packages, I think will probably overtake the market for some time. I think the Fed needs to do a little bit more work, perhaps, in terms of placating the market. But as you can see, I think taking that stimulus off, completing it, it has done its job. We're not a basket case. If anything, it's done the right thing, and it's certainly made a soft landing, or a softer landing. So I think Bernanke now will let the market run its course, offer outside stimulus, and then try and work it that way. But that's about it from me. I hope everyone has a good week. We'll certainly talk to you over the coming days, and bye for now.